Rohr here with an early global view on Tuesday, January 6, 2015. It's currently 7 a.m. U.S. Central Time for our first video analysis of the year. And of course, the markets were quite active on some rather extensive macro psychology shifts at the end of last year. Right into the top of trading back on Friday the 2nd, and we'll get to more of that shortly. So, what does all this mean to the markets? Well, as you can see, even as we were out into the end of last year, as we noted, this is the March S&P 500 futures short-term charts. That's hourly here on the left, 30-minute on the right. The market was sagging. And in spite of a higher opening coming in on the first nominal day of trading on Friday, the markets took some further pressure and were obviously nervous. What was interesting about that is that the S&P had gotten back down to a key area that we had spotted previous around 2040 to 36. That was one of the areas it broke down below when the market was failing, going all the way back to the slippage back in early December that led to the swing well back below 2000. And we're glad we opened this chart because it points up one of the key areas, the old July high at 1985. And the reason we're highlighting December 17th right here on the short-term view is this was the setup of the market having been below 1985 for a couple of days as we headed into the FOMC announcement back on Wednesday, December 17th. And it was, again, right around to just below, or probably just above 1985 as we headed into that 1 o'clock announcement, and the continued accommodation from the Fed put this market back on the bid. They got it back up around the next key level, right here around the 2013 old high from back in September before the October debacle, and of course gapped out massively above it then on the 18th. That set the market in motion for the push to the new high. And the reason that's all important is we are back down around 2013 now, and the lower important support, even though we had this up break out of the downward channel going back to the 17th, back at 95, we'd still be looking at levels around 2085 to 80 as the important support if the market should slip below 2000.